My expectation is Bitcoin will continue to grow as digital capital. It'll serve as a long-term store of value for the world. I think Bitcoin powers the future. It's going to empower the 8 billion people on the planet and the working class to a greater degree than any other financial asset ever invented. You have better property rights than the richest person on earth, than a Jeff Bezos or than an Elon Musk or Bill Gates. Bitcoin will continue to grow as digital capital. It'll serve as a long-term store of value for the world. Right now, it's 0.1% of the world's assets. It's about $1.4 trillion out of $900 trillion. It's big in crypto economy, but it's fairly small in mainstream economy. I think the entire worldwide addressable market for store of value for long-term capital is about $450 trillion. So 1.4 out of 450 trillion. And I expect Bitcoin will grow progressively to be 7% of the assets of the world, not 0.1%. And when it gets to 7%, it'll be 13 million a coin. So 13 million, and that's over 21 years, so by the year 2045. And I think right now it's been growing, for the last 4 years, it's been up about 50% a year. And it's gradually decelerating its growth rate because as it gets bigger, and as it gets more widely adopted and the law of large numbers kicks in, it should decelerate. If you look back over the last 100 years, the US dollar money supply expands about 7% a year. So I'm just thinking it'll continue for the next 20 or 30 years at that trend. And once you crank in that number and some assumptions about inflation and technology, the conclusion is all the other asset classes will grow plus or minus a few percent. Equity will grow a bit faster, real estate about the same, perhaps gold slower. Bitcoin will grow faster because it is demonetizing gold, demonetizing real estate, demonetizing certain equity indexes, and demonetizing corporate bond portfolios. These are all things that wealthy people store their wealth in order to just keep it. And so if you see Bitcoin is going 50% to 45% growth, to 40% growth, to 35% growth, to 32% growth, to 30%, to 28%, to 25%, at some point it's approaching the returns of the S&P index or equity indexes, and they've been like 12%, 10 to 12%. And so Bitcoin is moving toward that. Those companies are going to buy Bitcoin. And as they buy Bitcoin, they're going to actually merge. And so these two lines of what we'll call traditional capital, which is diversified equity portfolios, and digital capital, which is what Bitcoin is, they're moving toward each other. The volatility of conventional corporations is the VIX. If you study the VIX, and it's like 15, 16. And the volatility of Bitcoin is what we call devol. And it's like 55. The devol is moving toward the VIX. And when Bitcoin is a $200 trillion asset class, maybe the Bitcoin volatility is 20 and the VIX is 15. Bitcoin's always going to be a bit more volatile. It's always going to be performing a bit more because it's global, open 24/7, pure digital capital, and it strips away the risk factors of companies, corporations, and it strips away the risk factors of property, right, of real estate. And so that's why it's going to outperform, and I've explained why it's more volatile, because it's always going to be more tradable, more global. Some guy can short it with 100x leverage in Singapore at midnight. That's illegal in New York to do with equity. So the point is, there are some things you can do with Bitcoin you'll never do with traditional assets. But when you crank all that in, and I did it in a model, it's called the Bitcoin 24 model. You can Google Bitcoin 24. And if you Google it, you'll find a link to GitHub, and you can go download the Bitcoin 24 model, and you can put in all your own assumptions for all these macroeconomic factors and all these technical factors. and you can run your own micro models for your family and your corporation and your country. So, don't take my word for it. Try it out yourself. But if you download Bitcoin 24 or you look at my assumptions are basically, those things. And the result that pops out is Bitcoin, on average over the 21 years has an annualized rate of return of 29%. And that 29% just, it grows with volatility up to 13 million of Bitcoin. So you can, if you wanted to figure out how much will you have in 10 years, you could download the model and put in your assumptions and look at the 10-year point. Maybe you're more bearish. The bear case would be only 3 million a coin, and the bull case is 49 million a coin. Everyone can have their own assumptions. But I think if you want something simple, if you want to reduce to a simple sentence, I would say, if you're a young person, every Bitcoin you buy today is probably worth $13 million in US dollars in 21 years. So if you can get 5 Bitcoin, you would have 65 million. Now, it won't buy as much in 21 years as it buys today, but it'll buy a lot. It'll buy, it'll buy a lot. I mean, consumer products will appreciate at 2 or 3% a year, or they'll get cheaper because of technology. And on the other hand, Palm Beach real estate, if you want a beach house in the Hamptons or Palm Beach, or you want the best condo in the middle of the biggest city, that's going to go up 7%, 6-7%. So, you want to beat the 7% if you want to buy rich things, expensive things. You want to beat the 2% if you want to buy the cheap things. And I think Bitcoin kind of beats everything, so that's why it's a pretty good idea.
Do you think Bitcoin is to keep the rich rich or to empower the poor? Because you see a lot of stories of, people with really low paying jobs and they came across Bitcoin. All of a sudden they're this, really rich kid living in Dubai.
I think Bitcoin powers the future. So the answer is it's going to empower the 8 billion people on the planet and the working class to a greater degree than any other financial asset ever invented. There's no other asset that you can put on an Android phone and buy $40 a week worth of that gives you the same property rights as a mega billionaire. You have better property rights than the richest person on earth, than a Jeff Bezos or than an Elon Musk or Bill Gates. You have better performance than they have. And you can buy and sell it, and it's liquid to you at all times. So, there's nothing better than that. And on the other hand, the wealthy people that reject empowerment for everybody else, that they reject the crypto economy and they reject Bitcoin, they're going to get poor, right? They're going to be invested in 7, 8, 9%. The really conservative ones will get 7% return. The normal ones will get 10 to 12% return. The people that buy into Bitcoin are 29%, right? So the rich will probably still say rich, but they will lose position. The smart money, the wealthy people that embrace the future, that embrace the digital economy, they'll get wealthier, but they will also boost the working class and the poor that get on that train with them, right? They're basically all working together, right, in a coalition. So I think Bitcoin's going to drive the digital transformation of the capital markets. And that means that, everybody that buys any security that's backed by Bitcoin is going to get better yield. They're going to get better upside. They're going to get better performance. So indirectly, Bitcoin benefits pension funds, retirees. I think, people that hold stock or exposure to Bitcoin or MicroStrategy, 250 million people have something right now that's exposed directly to Bitcoin, and that will eventually spread to 1 billion. So everybody in the world benefits indirectly. It's like you benefit indirectly by owning any asset that has Bitcoin exposure. You benefit directly if you buy the Bitcoin. And then if you want to really make a lot of money, the way you make a lot of money, Bonnie, is you take your podcast and you say, we're going to be the Bitcoin podcast. And then you and the podcast is worth $2 million. I don't know what it's worth, but we're just gonna pick a number. Indulge me. $10 million. Higher or lower?
Okay.
You tell me. What 10 million. You want to go
Let's
higher or
do
you want to go
10.
lower?
Let's do 10.
Okay, 10 million. So the podcast is worth 10 million. So then you go to a venture capitalist that believes in Bitcoin and wants part of the digital future, and you sell them 25% of the podcast as participating preferred stock, and they give you actually they give you more, whatever, what's the pre-money valuation of 10? 2.5 gives them 20%. So $3 million or something. They give you $3 million. You buy $3 million of Bitcoin with it. And now Bitcoin doubles every 3 years. And now you own 80%, 75 to 80% of the upside, and they get 25% of the upside. And Bitcoin doubles every 3 years, and so in 3 years you have 6 million. Another 3 years. By the way, when you have 6 million in 3 years, your podcast is probably going to be valued at 15 million, and now you raise another 5 million, and you buy more Bitcoin, and now you have about 10 million in Bitcoin, and then it doubles, and then you have 20 million. And sometime in about 10 years, you have about 30 or 40 million in Bitcoin. And it's going up 20% a year, and you're making $10 million a year. And then you take your company public, and then you raise $50 million or $20 million, $30 million, and then you have $100 million of Bitcoin, and then you're making $20 million a year. And you've got 3 people working for the podcast, and you've got a company, basically a $100 million company. You've got $20 million, $30 million a year in earnings, growing 30% or 20%, right? And then, looking out 20 years, you're a billionaire. It's not bad, right?
Yeah,
And
that
so
sounds...
what's the idea? The idea there is aggressively levered long. So the thing that you can do is, if you're a passive participant and it's 5% of your portfolio, you get 100 basis point more return. If you're a buyer and it's 50% of your assets, you're getting 20 to 30% return on your assets. If you're a private company and and you sweep all your cash flows into Bitcoin, then your profits will double or triple over what they would have been otherwise. If you can raise money, you're 10x. And if you can go public, you're 100x. By the way, what I've described is not any different than how you get rich in the real estate business. If you're a real estate broker, I would say, well, first you scrape together $1 million, and then you go borrow $9 million, or you raise $5 million in equity, and then you go borrow $20 million from the bank, and you buy a $25 million building, and it goes up 7% a year. The problem is it takes you 10 years for the building to double at 7%. So then you've got a $50 million building, and then you borrow another $20 million from the bank, and you buy another building, and you get $200 million of real estate. And after about 25 years, maybe you've made yourself couple $100 million with a combination of equity leverage and debt leverage. But you have to choose the right buildings, and you have to wait. And the thing about Bitcoin is you don't have to choose the buildings. And Bitcoin is moving faster, and it's a simple idea. All you have to do is invest your equity, invest your debt, invest your cash flow in Bitcoin, and don't sell the Bitcoin.